So the S&P 500 is at all-time highs. There's never been higher than now. Now, as we can see here on the graph, this is well, it starts in 1997, and it's been steadily going up throughout the years. But in the last 10 years, especially, it's just skyrocketed, and that has never happened before. Not like this. 180%, and now in the last 2 years it's like 50%, yeah, more or less. So this is very, very high. The last year it was up by 26%, a little bit, yeah, 26, 27, 28, depends on when you want to stop counting. But yeah, it's been a good couple of years in the trading world. Now, things might change because Trump is going to enter office in well, a few weeks from now. And when he does, he has promised that the first thing he's going to do is impose tariffs and end the Ukrainian war. Now, tariffs are a prickly subject. The first time he did it, economists criticized him. They said that it was going to be bad for the economy. In the end, it wasn't that bad. But of course, the tariffs weren't as aggressive as he promised in the election. So that's one thing. But now he has said that he wants to impose 25% tariffs on all goods from Canada and Mexico, and tariffs as high as 60% on goods from China on day one. Now, on day one, he is unlikely to do all that at once, like the tariffs and the Ukraine ending the Ukrainian war. But that is what he's saying. Now, we can take it at face value, but a more sophisticated analysis would indicate that this is just the direction in which he's gonna go. Now, to what extent he does it or doesn't, we'll have to wait and see. But tariffs are going to be implemented for sure. And he's going to try to negotiate something with the Ukrainian war situation. But we'll have to see. Another thing that he's promised is he wants to devaluate the dollar. Now, the dollar has been gaining strength over the last years, a lot of strength, as we can see here. The euro once stood at a 140 exchange rate. That means that $1 equaled €1.40, but now it sits at about roughly the same value. So $1 is about €1. Now this could go lower, and $1 could be exchanged for 80 cents, 80 euro cents in the future, but we'll have to see because Donald Trump has promised that he wants to devalue the dollar to make exports more attractive in the market. This could reverse its trend, although it is unlikely because tariffs usually strengthen the dollar, but it remains to be seen. It remains to be seen. As we can see in the economic crisis 2014, there was an energy crisis in Europe. The euro lost a lot of value. Brexit also had an effect on it, although it then recovered a little bit, and then the pandemic hit, and yeah, it's wasn't a good situation for the euro in the last 10 years. The last thing I want to talk about is Ukraine. Now, if the war ends, it's going to be a very good moment to invest in this company, Ferrexpo. Ferrexpo, for those who don't know, is a Ukrainian iron manufacturer, and it has been largely unaffected by the war because the mines that it extracts iron from are not in the contested areas in the war front. They're far away from it, but they're still within Ukraine. So when the war ends, it will resume operations, and the stock market will recover from its very high point of 480 points We can see here. That means that right now it could go up by 5 times its valuation that it has currently. Maybe more if you take into account the inflation that happened after 2021. So that's why in the last 6 months it's recovered a lot of ground. And yeah, it's at 100% increase in the last 6 months. Pretty big deal. We can expect this to keep going up if there's a peace deal agreed upon. We can see here that when Trump was elected, November the 5th, it did go up by more than 10 points. So that meant how much? 27%. And it just keeps on going up. Since Trump got elected, it's gone up by 70%. And of course, if a peace deal is agreed upon, then this is going to keep on going. I'll have to wait and see. But yeah, that's about it for the market analysis for this first trimester of 2025. And yeah, I'll keep you updated. I'll see you in the next one. Bye-bye.